So in my almost 8 years of helping people buy houses, there's a lot of preconceived notion when it comes to what all you need in order to buy a house. And one of those things is money. And it's not just about money itself, it's the amount of money that you need in order to buy a house. So like you, I used to think that you needed to save up thousands of dollars for several years to reach that 20% for the down payment. Or you see these advertisements with 0% down programs and you're not sure which one is the truth. It's all confusing. So in today's video, I'm gonna break down from my years of experience of helping people buy houses, the exact amount, what people are actually needing in order to buy a house. Now let's get into it. So in this video, I'm gonna break down the two different types of cost. Number one, you have your fixed cost, which is just the cost that everyone pays when you're buying a home, regardless of loan type, regardless of the purchase price. Then number two, you have your down payment. And this is gonna depend on the loan type. This is gonna depend on the purchase price. Now let's go over your fixed cost. Okay, so the first fixed cost is gonna be a home inspection. Now the benefit or the whole purpose of doing a home inspection is really to verify the condition that the home is in. Now it's not necessarily a requirement, but it is highly recommended. And the cost to do a home inspection is gonna be anywhere from about $400 to $600, and this is for a general overall inspection. If you need more specialized inspections, let's say on the general inspection, the inspector tells you really need to have a foundation inspection done, then that's going to be a separate cost and it can drive this cost higher. Now, when you do the inspection, it's going to be in the first 7 days of the contract. And if the home inspection comes back horribly and you don't want to move forward, this cost is non-refundable. Then your second fixed cost is going to be your earnest money deposit. Now, an earnest money deposit is just a deposit that shows really the seller that you're serious. And typically you put down about 1% of the sales price. So if you're buying a house for $200,000, you normally want to put your earnest money deposit around $2,000. Now, there's not a specific number that you need to put down. You could put down $100, but generally speaking, the more that you show in the deposit, the more likely your offer is going to get accepted. Now, when you do this normally this is required on day 1 through 3 of the contract. And this money, the deposit, depending on which state you're in, it either gets held with the title company or it gets held with the real estate brokerage office. And it's not technically a fee. If you end up closing, this gets applied towards your down payment, towards your closing costs, so it doesn't go away. And if you do decide to not move forward with the contract, you want to make sure there are certain contingencies that you meet within that contract in order to get that deposit back. Then your third fixed cost is going to be the home appraisal. And the whole purpose of doing an appraisal is just to verify the value of the house to make sure you're not buying it for less than what it's worth. And the cost of this is normally around $500 to $700. And if for some reason you need to have a reinspection done, let's say the home appraiser says that the roof needs to be replaced or something needs to be fixed within that, then the home appraisal will have to come out, and that's around a $200 fee if needed. And you pay this normally within the first 2 weeks of the contract. You can do it before you do the home inspection. You can order it right after the home inspection, and the lender or the bank is going to be the actual people that are going to order this. You do not find your own appraisal by yourself. Then your fourth fixed cost is going to be your closing cost. And what's included in the closing cost is it's really a blanket term. You have all of your title fees. You have your government and state fees as well. Then you have starting up your escrow account, which is just paying your home insurance and your property taxes in advance. And you have any underwriting or lender fees. And the typical cost of this can be anywhere from 3 to 4% of the home price. So if you are buying a $300,000 house, typically closing costs are going to be $9,000 to $12,000. Now, this gets paid day of closing. This is not an upfront within the first couple days of the contract. And a good strategy that a lot of people are doing right now is they are getting the seller to pay for their closing costs, so they're not having to come out of this out of pocket. So with the USDA loan, the down payment, it's 0% for the down payment. So that means there's no down payment that's required on this loan. And here's the qualifications. So this can only be used to buy in rural areas, so outside of the city limits. Also, you can only use this to buy your primary residence only, so the house that you're going to be living in. And you need to have very least 645 credit score. That's the minimum. And it's also, this loan is very strict on income and location requirements. So while it's a really good 0% down product, it's really difficult to get approved for. Then you have an FHA loan, and the down payment that's required, it's 3.5% of the home's purchase price. And the qualifications, again, this can only be used to buy your primary residence only. You need at least a 620 credit score. Now, you will see a lot of other places advertise that you could go down to a 580, even a 500 score. And while that might be technically true, you're gonna get killed on the rates and the fees, and it's gonna make your approval a lot more difficult. So really that next benchmark is gonna be the 620. Now, a big misconception on this loan, it's only for first-time homebuyers, and that's not true. Anyone can buy this, can use this to buy a house as long as you're buying it as your primary residence. And this is one of the most flexible loan products that's out there. So with a conventional loan, the down payment that's required, minimum is going to be 3% if you're a first-time home buyer and buying your primary residence, or it's going to be 5% if you are not a first-time home buyer and you're buying as your primary residence, or you need at least 20% if you're buying as investment property. And here's who qualifies for this type of loan. So really for this type of loan to make sense, you really need a 700 plus credit score. If you have a lower credit score, with this loan, you're gonna get killed a lot of times on the rate and the fees. Probably FHA or a different loan type is gonna be cheaper for you. And what's nice about the conventional loans, you can use it to buy your primary residence, a second home, or investment property as well. And it's the easiest or most flexible when it comes to the condition of the home. So if the home needs a lot of repairs, conventional is going to be the way to go. And with a VA loan, there is no down payment that's required if you have full eligibility. And here's who qualifies. So if you're active military, if you're a veteran, or a surviving spouse, and this can only be used to buy your primary residence only. Then you have your down payment assistance programs and your grant programs. And the whole purpose of them is these programs are designed to give you money to cover the required down payment. And they're normally coupled with either an FHA loan or a conventional loan. Now, where all of these programs differ, because there's thousands of programs out there, is some of them are truly forgivable grants starting day one, or some of them are more like deferred loans. And if you ever go to sell or refinance, that money has to get paid back. So it's really important that you know all the stipulations up front. And here's who qualifies. So most of these programs are going to be limited to first-time home buyers. You'll have a few that are not, but the majority of them are. Also, most programs you need minimum at least a 660. Some programs will allow you to go down to a 620, but really if you have a 660 plus credit score, pretty much all the programs will be open for you. Also, you can only use this to buy your primary residence only. You cannot use a grant or DPA program to buy an investment property. Also, a lot of these programs have very strict requirements when it comes to incomes, debt to income limits. So you might not qualify for all of these programs, or it's going to be a lot harder to get approved for these programs. Okay, now here's the total cost breakdown, and I'm basing this off of a $300,000 home. So up front, again, you're going to have your home inspection, which is going to cost you about $400. Then you're going to have your earnest money deposit. In this case, we're going to say $1,000. Then you're going to have your appraisal, which is about a $500. So up front, within those first couple weeks of the contract, you're going to need about $1,900. Now, when it comes to closing day, on your down payment, this is based on FHA, which is 3.5%, you're going to need to bring $10,500. And then when it comes to closing cost, ask the seller to cover the closing costs for you. So we're going to say $0. So really, you'll need to bring your down payment minus your deposit. Again, in this case, we did $1,000. So you'll need to bring $9,500 to the closing table. And if you were able to get a grant program to cover this down payment, you would need to bring $0. And in fact, you would be able to get that deposit back at the day of closing. And if you're planning to buy a house and want to know exactly how much buying power you have, click on the link in the description, schedule a call, and I'll be in touch.